Hey everybody, it's Friday. Happy Friday. Markets suck. We've been talking about Rektember and seasonality for a long time now. And here we are. Yes, things go down, but we're going to try to dig into all the stuff that we can to try to figure out exactly what's going on. And if there's a bottom in sight. Last time I did this, I mentioned the crypto market cap was 2.02 trillion. We just lost a lot. It's now down to 1.92 trillion. Volume, 80 billion. Volume's there. It's good. Fear and greed is down to 22. We'll talk a lot about that too. And we'll talk about, seasonality. What can happen? We'll look at some new stuff about Firedancer. What type of scalability does it require to do 99.9% of all transactions? We'll look at miner revenue. We'll look at a whole bunch of on-chain. We'll talk about money. We'll talk about interest rates. We'll talk about Fed rate cuts, liquidity, and everything else. And remember, just a quick reminder to the whole team here, I do not control the markets, all right? So when the markets go down, don't blame me. I share data. Long-term holder, thank you for coming. Happy Friday, everybody. People get really, really peed off when the markets go down, all right? That's markets. If you can't handle it, it's probably not for you. But what I do is, though, share more data than you can find anywhere else. Let's jump into it. And disclaimer, this is not financial advice. And thank you to everybody on Patreon too and the mods in the chat. This is from Alexandru Patularu, new to Patreon. Love it. Thank you for joining the team. Now we're going to talk a bit about fear and greed because there is some information we can glean from this. We've shared it before. We shared it on August 5th when people were scared to hell, and we remember the recovery from there. But here, the sentiment remains very negative. Research says we're in the middle of the deepest funding rate environment since Bitcoin's low in November 2022. And we know how ugly that was. Thank you, Moto89. This is an indicator of cautious market participants. They are not jumping in. I would be in that category too because I've been sitting on cash since May, June, and waiting for a big capitulation event. The August 5th thing happened so fast I didn't catch it. But again, the most important thing to remember though is a bad market sentiment does not mean that prices will go up. But it is an indication that we're close to a bottom, that seller capitulation is almost done. And the sellers are selling pretty aggressively. Let's look at this from LUCA. Now, according to the Fear and Greed Index, there is currently more fear on Bitcoin and the crypto space than there was at the absolute bottom of the bear market. This is not how macro tops develop. Never. A lot of talk out there that the bull market's over. No, we're all going to die. No, the current market conditions do not align with what you'd expect with a major top. And the level of fear indicates that the market is closer to a bottom than a top. And this could be the potential for upward movement in the future as fear often precedes market recoveries. Extreme fear often precedes market recoveries. Another view of this, the fear and greed chart, you can see here I drew a little black line on it to show you where we are. And yeah, we've been here before. We broke that black line on August 5th. That was extreme fear. People literally pooed the bed, as they say. It went down to like 16, but very briefly, and then it bounced right back up. Let's overlay the fear and greed chart onto a Bitcoin chart. Try to get a feel for where we are right now. So if you zoom back, Bitcoin's pretty much where it was. Actually, it's still above where it was on the 5th of August, but fear and greed is almost as low as the 5th of August. And we've seen what happens. Every time, literally, like clockwork, the correlation between fear and greed and Bitcoin price is pretty damn accurate. Bitcoin Maximum, thank you for coming. But you can see every time fear and greed dips, price dips. It's actually the price dips that cause the fear to escalate. So think of it like that. It's not exactly a leading indicator. And then it recovers, so does the price. And then it dips, and so does price. Then it dips harder, and so does price. And then it recovers fast. And check out some of the recoveries. Like the July recovery is pretty astounding. We went from 56K straight to 70K in less than 10 days. And we are in the dipping again. But what's interesting about this period of fear being high is we've been here since the carry trade unwind, since 4th of August. And we had a couple little blips, but it's been really, really sucky for a long part of time. And that is September. I always share the monthly, the seasonality, and talk about it. I've modified my seasonality table. We'll get to that in a second. But before we do, I want to talk about other stuff that's happening, because it's not just us. I'm not fearful at all. I'm too old to be afraid of anything. Joe the Hun, thank you for coming. But the Fed are also very fearful. This came out today. And Linda, you guys are all, very touching today and Friday. But September is always known as Bitcoin's red month. And the period between October and April paints a beautiful picture. But if you look here, Fed officials also agree it's time to start lowering federal funds rates, because they are worried. They see some of the data out there and it is ugly, really ugly. Anyhow, back to why they need to cut rates. And this is stunning. Don't worry, we'll get back to Bitcoin in a minute, but this is all it's all integrated into the story. But you can see here, the US now is spending over $3 billion per day on interest. That's triple the amount paid 10 years ago and has doubled in just 2 years. The annual interest cost on the federal debt is over 1.2 trillion now in Q2 2024 and going to 1.5. So if the Fed doesn't cut rates by 1% and all government bond yields climb by 1%, daily interest expense will be a lot higher, especially as the old debt rotates into a new higher coupon as well. Now, to say that this is a debt crisis is a bit of an understatement. And I know a lot of you, because $3 billion is nothing at all. But you know what you can buy with $3 billion? You could build 2 of these a day. The biggest building in the world and the biggest factory in the world. You can build 2 of these puppies a day. The initial investment was $1.1 billion, and they added about $600 million for an expansion. So call it, 2 gigafactories a day is what you can build with the amount of interest on debt. Again, the biggest building in the world and the biggest factory in the world. That's how much $3 billion is. And people brush it off. But why is the Fed worried? Why? Because jobs data was weak. There was a reported increase of 99,000 jobs. They were expecting 160,000. That didn't happen. ADP has some pretty crappy numbers too. And we are now at the worst job creation since the collapse of 2020. And it's very similar to some of the job numbers that we saw back in 2009 at the global financial crisis. Also, Broadcom tumbled. That's tickers AVGO. Mobileye falters after Intel is looking to sell it. And the markets are down all across the board. It's Rektember. But one thing I do want to state about Rektember is it can be misleading. If you look at monthly returns, it can be a little bit misleading, because sometimes you get these big, vicious V-shape wicks down, big capitulation wicks. That's what I'm waiting for. And then you get a very fast recovery. So from the beginning of September to the end, it can sometimes look like not a lot happened. But when you're in it, it's ugly. Ugly as can be. Anyway, Ronan, thank you so much for coming. Now, they're not talking about one rate cut, the Fed. They're talking about a series of rate cuts, which will propel risk assets. Top Fed official John Williams endorses a series of rate cuts, and they are all very nervous. Their dream of a soft landing is now in jeopardy because the job numbers suck. And if it wasn't for the huge government spending, GDP would suck too. But let's get back to money and Bitcoin, because that's why we're here. This is a beautiful chart from DU09. Hope I got that right. And it's just so pretty, so simple. Goes back to 2018. Best charts are the simplest charts. We have the blue line, which is a global money supply, M2. It just broke out to a new all-time high. I'll get back to a chart on that and I'll show you exactly how that is. But you know what hasn't? And that is Bitcoin. So normally these two are very correlated, but they are diverging big time. And that is not normal. This is why many people are bullish. So the first is, as you can see, the blue line. And the other line is the Bitcoin price. And again, Bitcoin is not following. It normally does. So what's going on here? And the other thing is, if you look at the bull market straight up in blue, a lot of people expect the global liquidity pump to be much higher than the C19 one. Can you imagine that? So again, it doesn't look like this bull market is over, not by any stretch too. So let's jump into a couple more charts. This one, I made a video back in December 2023. Make sure I get my years right. I always make a top 20 forecast for the year. One of them was we would hit $100 trillion in global liquidity in 2024. We are now $99.077 trillion of global liquidity. We're nearly there, ladies and gentlemen, nearly 100 trillion. And you know what happens after you hit a big number like 10 or 100 or 100 trillion? It goes up real fast. It just accelerates in terms of percentages. To go from 9 to 10 is kind of a big jump. To go from 10 to 11 is a small jump in percentage terms, but has a huge impact on money and flotation, and this will float the markets. Now, another chart for Bitcoin, shout out to Josh in the community as well, who shared this from CryptoCon. You know, for the last 6 months, it has sucked. Since March 2024, it's just been kind of a downwards channel. Yeah, we get it. But what happens next? Well, if we go back to 2019, I know 2019 isn't a very good analog because it is 5 years ago, not 4 years ago. So it represents the pre-bull market activity. And the money printer wasn't even kicking in here. But again, the big bottom was December 2019. I actually happened to be heavy cash at that time too, because I knew about C19 and I had a feeling there was a bit of a financial crisis coming. And guess what happened next? The money printers went into high gear when C19 happened in March. So again, from that perspective, it is kind of similar. But sometimes you got to wait a little bit longer. So if we go back to 2019, 24, 5 years ago to today, there are many similarities, especially on this chart with the kind of, I don't know if it's a Wyckoff pattern of the points, 3 to 3, 4 to 4, 5 to 5, 6 to 6, 7 to 7, extremely similar. And he believes that this short-term mess will be over soon, but we have to, there could be extreme, as always, volatility in September because it's the worst month for crypto and Bitcoin. This is some Bitcoin seasonality here. You can see, again, I've been heavy cash since May, June, waiting for the September dip because it always happens. Seasonality is key in investing. And Mr. Crypto on X says this September is always the worst time to leave crypto. If you're already in, don't leave because this is where the bottoms happen. The damage is already done. You'd be selling the bottom here if you do. And check out October, right? The average down return for September is 7.2%. Nastiest month of the year. I don't know where the March came from, but he's only looking at the last 10 years. I used to look at the last 14 or 15. But again, October, very good. November, very good too. And December, very good. This is my chart that I keep up to date. It's automatically fed actually, so I don't have to keep it up to date. But here you can see the monthly returns. And what's uncanny right now is August 2024, we fell 8.8%. September 2024, we're down currently 8.8%. That is an uncanny pattern. And as I said before, it's very rare, or it never happens, where you have 4 red months in a bull market year. 2024 is a bull market year. That tells us October, November, December will be very good. If history repeats. Sometimes I say things, but I always use the caveat, if history repeats, the world could implode tomorrow. Then there'd be no more Bitcoin, okay? But if history repeats, expect the next 3 months to be extremely good. And the average negative return is 5.3%. What I did a modification to this table because I used to calculate the average from 2009 onwards. I revised the formula below, and now I just calculate from 2011 onwards, okay? So the actual averages for the month will be a little bit different. But again, September is sucky. August is sucky. We just left September and August. Now, shout out to Cern Basher, friend of the channel. He put together, by the way, Cern also likes 2 assets. They are called Tesla and Bitcoin. A little bit of a parallel there. I didn't know he was doing so much Bitcoin analysis. He just kicked this to me this morning. But these are drawdowns in perspective. Right now, when you look to the right of where we are, again, nothing like historic drawdowns. So this is a volatile beast. I always warn people to wear the seatbelts, and this chart goes all the way back to 2010. But you can see the drawdowns are diminishing a little bit. It may not feel like that right now, but they are nowhere near as bad as what they used to be. Now let's go to our box. The matrix and the top and bottom indicators, check in on these puppies, see where we are. The matrix is kind of the 90-day post-halving. First vertical line is the time of the halving. 90 days later, of course, we had the floor. We just broke through the floor. We're down below the floor again for the third time since the halving. The floor is about 57.5. So it's not good. Price right now is about 53.6. And actually, let's check 53.4 as we speak, because it's just falling away. Sigdiv, good to see you, buddy. Yeah, right. Rektember is what we're in. Now, the important thing to note here is the top and bottom indicator, which is yellow, is falling too, and this normally correlates with where we are. But let's zoom out a little bit more and get a feel if this bull market is over. And this is the top and bottom indicator since 2017. You can see we're still yellow, which means we're not even halfway through the bull. We've yet to experience orange, dark orange, and red. Red is hit the ejector seat. Be careful. And that's where we are, everybody. So things are not too bad. And also, as Cern would say, keep your eye on the prize. Again, it's a volatile beast. But over the last 14 years, Bitcoin has delivered 171% average return. And remember, a little over 20 months ago, we were at 15,500. So yeah, we're down off the highs, but just remember the drawdowns, everybody. It's a very high vol asset. Therefore, seatbelts. If it wasn't a high vol asset, the returns would suck and they wouldn't be anything like this at all. So shout out to Cern. That's crazy. And of course, returns are diminishing, but during bull runs, they're still extremely good. And that's why I've nearly 4x'd from the bottom already. And shout out to everybody. This is the new investor quiz. Over 6,000 quizzes have been completed so far. Nothing like this has ever been done before. And it's an inspiration to the team, basically bringing my vision to life. It's free. Jump in, find out who you are, identify your blind spots. This was inspired years ago from reading a book from Ray Dalio. And he said the most important thing as an investor is to know where you are weak and shore up that weakness. And that's exactly what this is designed. And 6,000 people have gone through it already, which is mind-blowing. Now, back to some more Bitcoin charts. This is from CryptoQuant. And for exactly 1 month, short-term holders, which are the people that hold between 30 days and 90 days, have been trading at a loss. And they are capitulating and they are selling. And in the current bull market, this metric has not fallen below 17%. And the current figure is minus 8%. If it continues to climb, however, the number of people willing to sell coins at a loss could increase to go back to historical levels. You can see the big, again, the yellow drawdowns in the past and how far we've gone. We haven't gone down that far. The short-term holders on average are only selling at an 8% loss, but it can go to minus 17%. And in terms of the amount of Bitcoin and ETH supply active within a 1 year period, this is interesting. This chart below shows the percentage of Bitcoin and ETH supply that has been active within the last 1 year. The number of Bitcoins have been active within 1 year period increased from 29% at the beginning of the year to 34% today. And my theory for that is a lot of people that had long-term Bitcoin sold it and moved to ETFs for security reasons. And interestingly for ETH, it's the other way around, with the number slightly decreasing from 39% on January 1st, 2024 to about 38% today. And the difference could be explained by the price action. While Bitcoin has reached a new all-time high this spring, back in March, which could have been an occasion for holders to take profit, which they did, Ethereum is still trading well below its previous all-time high, and investors are still holding on to their coins at the moment. An interesting chart to observe. Somebody said to me yesterday or the day before, it's weird psychology. They are still holding their, I won't mention the name of the bag, we'll talk about it a bit later, but they will not sell it until it gets back to $3. Remember, hope is not a strategy. Sometimes things will never get back to their all-time highs, so bear that in mind too. So, Marty Party enters the room. This is his Wyckoff retest. Hope I said that right. He believes it could be a phase B secondary test at 54,300. Well, we've 54,300. We are at 53,300 right now. So we've blown through that retest. So there goes the Wyckoff. And per the liquidation map, Bitcoin, I believe, could easily fall to 52,500. When I put this together, we were at 54,500, so it's 2,000 away. And right now, we are now $800 away from this level. KT, I want to say thank you to everybody as well. Everybody's, you were all legends out there. I'm reading the comments as I'm trying to explain slides, and everybody is upbeat. They're not down and depressed, so you guys are legends. I appreciate that. Also, Russian miners, a guy called Sergei Bezdelov, he is the director of Russia's Industrial Mining Association. He revealed that in 2023, Russia had mined 54,000 Bitcoin, and that's over $3 billion. And the mining activity apparently generated about $50 billion in rubles, so it's like $560 million in taxes for the Russian government. So the miners, they seem to be doing it legitimately in Russia. They're not hooking up a rig to some power line off a big hydro plant or whatever else. They're paying taxes on the Bitcoin that they're mining. And that's a big load. So again, Russia is now confirmed to be mining Bitcoin, and quite a bit of it too. So when we look at the public miners, remember, they only mine about 34 to 36% of all the mining that happens on the planet. So that's Russia. And miner fees, though, however, in August, miners' revenue did hit that yearly low, totaling $851 million from subsidies and fees, with $20.76 million generated from on-chain transaction fees. And mining income in August was $100 million less than in July. So the miners are not making as much bank as they used to. And between block heights, 855,000 and 859,000, miners collected 4,289 blocks, and Foundry USA mined 1,248, accounting for 29%. And Pool mined about 1,000, about 25% as well. But fees are way down, and that's one of the reasons why the miners are being brutalized. Remember, they sell extremely hard to the downside when things are bad, and they go up extremely fast to the upside when things are good. Right now, we're going through a bad time. And getting into some crypto stuff, Polymarket, they now have over $100 million of bets on the actual crypto-supported, what would you call it, a betting platform. It's amazing, but they're also launching a thing called Polymarket Bingo, where users can bet on a bingo card filled with various phrases expected to be said in debates, rather than simple yes-no bets on single words. And this format is more challenging, but offers really good returns. So I never played bingo before, but this sounds interesting. Anyway, Polymarket is really taking off, and it's a great. And the reason we share this is because it's another driver of crypto adoption, which we like. And Injective integrates with Chainlink. This is big news. Injective now supported by Chainlink data streams, providing the ecosystem with ultra-reliable real-time data. This means faster, more accurate price information for DeFi apps and traders using Injective. And the integration improves reliability and accuracy. And this is a huge boost for innovation, security, and growth for both parties involved as well. A lot of the DeFi that's happening actually is also running off of Pyth, kind of a Chainlink competitor. And these things are growing. But I'm surprised they only integrate. I had assumed that they were already using Chainlink in the past. Anyhow, a little bit of Solana news. This is from Toli. And Toli argues that small blocks can, with a single monolithic layer 1 like Solana, can handle the vast majority, 99.99% of valuable transactions. And this goes against the trend of modular blockchain architectures that have gained popularity recently. But he got a bit technical, as he's a very technical guy. He talked about block size and frequency. And he now proposes 10 megabyte blocks every 200 milliseconds. And this results in 50 megabytes of data per second, approximately 400,000 transactions of 128 bytes each per second. So basically, if things are compressed, like a 10-to-1 ratio to 1280 bytes, the maximum speed to handle all the transactions on the planet would only be 40,000 transactions per second. So I hope I got that right, because it's a little bit tricky, all the numbers, the fours and everything else. But basically, if you have a blockchain that runs at 40,000 TPS, that's all you need to do 99.99% of transactions. But there's more. Firedancer's coming, and they just put together a new web landing page from Austin Federa. The Firedancer engineers are so excited for their talks at Breakpoint this year. They made a landing page dedicated to it and where they can be found at Breakpoint in Singapore on the 20th and 21st of this month, which is, wow, 2 weeks away. It's coming fast. Anyway, it'll be interesting to see what they can showcase there. I know they've been testing the last 6 months. They've been doing a lot of Firedancer tests, but it'd be interesting if we need, is it 40,000 TPS or 400,000 or a million? But according to Tolly, 40,000 could be all you actually need if you increase the block space size. We'll see. Anyway, interesting. And South Korea, they joined the crackdown on Telegram because of deep fakes. So more bad news for Telegram. I think they changed their privacy rules in France, which means I do believe not just the markets are capitulating, but Pavel Durov probably capitulated to France as well, making sure they have a backdoor into Telegram. So if you're doing something shady in France, be careful what platform you use. I don't know. And Charles flips out. He was kind of mad over a burn suggestion. He's the founder of Cardano, and he opposes burning 1.5 billion ADA tokens worth about $500 million from the project's treasury. And he thinks it would be very bad because it'd be like stealing from stake pool operators and Cardano holders. By the way, stake pools are why people hold Cardano, I believe. And the proposal to burn these treasury tokens emerged following the recent implementation of their Chang hard fork, which is all about governance, not about scale or anything else. And I think the reason why the community members want to burn tokens, if you reduce the supply, you increase the price. It's economics 101. So I think that's probably, to get people excited. If the thing just keeps going down for years and years, people get bored. So if they burn some tokens, it might help elevate the price, which would get people excited again. Because the best advertisement for an asset is number go up. That's why when Bitcoin just popped $500 in the last 10 minutes. So that's a little bit of number go up, gets people a little bit excited. But remember, still in a bit of a downtrend. And other good crypto news as well. Mastercard enables crypto spending with a Euro debit card in partnership with Mercurio, I think it is. And the card allows users to spend crypto from their self-custody wallets at over 100 million merchants. The initiatives integrate crypto into daily transactions, improving user control over their funds, while advancing Mastercard's commitment to embedding digital assets in their economy. So this is, again, really, really good for crypto adoption. But remember, if you do this and you're doing this with a hot wallet, do not connect your ledger or something else to it. The cold stuff needs to be super secure and safe. Do not do that. If you do want to use it, create a simple little hot wallet, throw a few pennies on there, not a lot of money, then connect that. But do not hook this up to your main storage bag, okay? Financial advice right there. And China. Made in China brands are back and on the rise. I remember as a kid, when something was made in China, it was considered poor, inferior quality. But now, Chinese companies dethrone foreign brands. You see that with their vehicles and other things right now. Chinese brands now dominate over 60% of all the rest of the brands in the world, which is stunning to think about. Absolute stunning turnaround. And Microsoft news, ChatGPT breaks 1 million paid users. Most of them are corporate users. And shout out to Sanjay for sharing this with me. So people are definitely paying for it. It's still, having 1 million people pay for your ChatGPT does nothing to defray the cost of all those H100s and the cost of each query. But again, it's progress. So shout out to Microsoft and ChatGPT. That's the story for today, everybody. Lots of crypto adoption news. Is the bottom in sight? Not really, but it's real close. But I'd be much happier if I see a vicious wick capitulation. Then I'd know it's time to run into the burning building. But until I see that, holding tight for now. So hold tight, everybody. Stay well. Happy Friday. See you all tomorrow. Thank you.